Hello traders and welcome to another video analysis. Today is Thursday the 15th of April 2021. Let's take a look at the Forex calendar. It looks very busy today. Some data from Australia had been published overnight in form of unemployment rate and employment change. As you can see, unemployment rate is going down to the level of 5.6%, which is better than expected unemployment rate of 5.7% and better than the last reading of 5.8. Employment change is going up, which is very good, 70,000 versus the 55,000, a little bit less than 88,000 last time, but it's still okay. The part-time employment change is a little bit worse, minus 20,000 versus the 10,000 expected, so it's not that good, but overall it doesn't look in a bigger picture, it doesn't look that bad. We got the CPI data from Germany as well, as you can see 0.5%, just in line with the expectations. And during the London session, that's everything from the important data scheduled for release. But during the American session, the US session, we got some data scheduled for release that might trigger some kind of a move on the markets. The first thing is ADP non-farm employment change from Canada. As you can see, it's scheduled for release 1:30 together with the manufacturing shipments. The retail sales data scheduled for release 1:30. As you can see from the US, are expected to increase from -3% to 5.8%, which is over 8% of increase. I'm very interested whether this would be a good forecast and if the market deliver the data. So that's worth to keep an eye on this. Philadelphia Manufacturing Index scheduled for release 1:30 is forecast to decrease from 51% to 41%. We got the unemployment claims, continuing claims data scheduled for release 1:30 as well. Capacity utilization and the industrial production 1:15. So plenty of data from the United States, including business inventories and the housing market index. And then we got at the end of the day natural gas storage change 3:30, and some speeches from FOMC member Raphael Bostic. So kind of a busy day for the markets. It might get really dynamic if the market will deliver or will not deliver the forecasted data. So please keep an eye on the triggers today on Thursday the 15th of April, and we are going to start our analysis with Australian dollar. Why? Because we broke above the neckline, which means this head and shoulders pattern is now, it looks like it is invalidated, because this low is not enough to be counted as a breakout to the downside towards 7,415. At least that was the target, that the minimum target has not been reached simply, and the recent breakout above the neckline towards 7,731 pips has been, of course, made, and 61% of the last shoulder down. Okay, this last wave down had been made as well, so we are now trading at the level of 7,746, and it looks like the bulls are heading towards 7,822, 7,851 levels. So it looks like this head and shoulder pattern is invalidated unless we'll get some massive candle down towards 7,415 before the 7,822 is hit. Otherwise, this head and shoulders pattern is invalidated, which means the market should rally higher, way above 8,008 pips. So please be careful with Australian dollar right now. The US dollar and the Canadian dollar is pair worth to keep an eye on, because we are being capped at 1.2630 again, and as you can see, we got this longer shadows, upper shadows on a daily time frame chart. This is daily candle, so it looks like we are going towards 1.2468. This is the target for the US dollar to the Canadian dollar, and we might get there very, very soon. The momentum is helping the bears because right now it's below 43 points, so the momentum is negative, the sentiment is still negative. People are selling the US dollar and buying the Canadian dollar. The ultimate target, the short-term ultimate target, is located at 1.2366. So that means the recent 2.28% and 2.21% bounces were all just a corrective counter trend bounces inside of the downtrend, which is still being continued on the US dollar to the Canadian dollar pair. So targets 1.2468 and 1.2366 are still active and are still possible to hit. So that was the US dollar and the Canadian dollar. Let's take a look at the S&P 500 in form of the SPX index. As you can see, there is no pause for bulls here. There is absolutely no change in the view. We are still going up higher and higher. Right now we made a new all-time high at 4,151 points, which means we definitely broke out of this channel, and we are trading way higher. Right now we can do the measure of the trend base expansion, so we will do the last wave up and the last wave down measure. As you can see, we almost hit 127%, but I'm pretty much sure we hit 100% of the extension, because it was located at 4,111. So right now we hit this level, we broke above it. Next target 4,181, and the extended target 161% target is at 4,270. So right now we are keep going up. Nothing is right now changing. There is no indication of a trend change. There is no indication of a uptrend termination. Let me just check the RSI. The RSI, as you can see, is at the level of 73, 72, so it is extended to the upside. Of course, the market conditions are extremely overbought, so please watch, keep an eye on one of these target levels here. This target level here, please keep an eye on this, because it might be a target at the profit taking level, right? Because we are extended to the upside, market conditions are extremely overbought. One of these levels, 4,181, 4,270, might be the taking profit level for bulls, and we might see some kind of a correction. As you can see, in order to count the correction as a game changing or like an overbalance correction, we have to break at least 6% to the downside, right? So please keep an eye on this, on this kind of a market behavior. Let's take a look at the Dow Jones industrial average. As you can see, the same situation. We are going higher and higher. There is no pause for bulls. We are keep going up. Right now we've made a local high and all-time high together, 33,904. This is the yesterday's high, and the target is of course 34,000 points. Let's just do the Fibonacci extensions here as well to see where this market might be going. As you can see, 100% has not been hit yet, because 100% of the Fibonacci extension is 34,670 points. So this is still above the current price, and this is still the target to be hit. But let me just do some 61%. I think it's a little bit lower. Yes, that 61% has been hit already, 33,651. So right now we are done with this. So there is only 100%, 127 and 130, 161% level, target levels available. Those are the levels that might be reached even before the end of the month of the April. Today is 15, so we are in the middle of the month, and it looks like the market is keep going up here as well. The biggest correction was around 4.7%. So even if we get there, we might of course be trading in on the extremely overbought market conditions. So again, these targets might be used as a taking profit levels for some traders, but the uptrend is still intact. And if we want to count this some kind of a pullback as a significant or like an overbalance, we need to go down more than 4.7% at least, right? So that would be some kind of a technical overbalance that might get some attention from bears, right? From the bearish side of the market. So nothing is right now really changing here. The outlook is still the same. The immediate technical support 33,607. This kind of a dodgy candlestick. Let me just zoom in. This kind of a dodgy candlestick looks like it's going, or a shooting star maybe, it looks like it's going to be invalidated, because if this candle is green, then of course the target is 34,000, and this signal, this candlestick signal will be invalidated, and the market will jump straight back up towards 34,000, above the 34,000 towards 34,670 points. So nothing changes here. If we just zoom out this time, we can see that despite this bad ticks here, we can say that since the March 2020, the middle of the March 2020, nothing is absolutely changed. We are still going up and up, and the uptrend is right now intact. So we are continuing the move up on the major indices in the US. The last one, let me just take a look at the German DAX. Current situation is very similar to the American markets. This is very interesting candle. It looks like again, it looks like a shooting star, or yes, it looks like a shooting star dodgy candle. Consolidation above the 15,160, and because we are consolidating here, so the upper consolidation is of course the upper boundary is the high of this candle from 6th of the April, 15,312. So this is very narrow consolidation, 150 points. This is nothing for DAX as far as I know it. This is please notice, this is the upper boundary of this main short-term channel here, made from the end of the February. So if the market wants to continue the up move, of course the next target is the round number of 15,500. So let me just put it on the chart. There you go. This is the next target. I just need to change the color so no one will get really confused. This is the next target eventually. I just move it. There you go. This is the target. I want to move the blue arrow. There you go. And that's the target for a breakout. If we, however, break below 15,000 and 159 or 60, then of course next support 15,000 and then 14,804. But so far it looks bullish, except the fact that we are trading on the extremely overbought market conditions. So please be careful, because if we start to go down, we might break below 15,000 and go straight to 14,804, and then even test the lower channel boundary market with blue line on the DAX. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Take care and bye bye.